This is the In Focus podcast from The Hindu.
Hello and welcome to another episode of the In Focus podcast. I'm your host G. Sampath. The Reserve Bank of India has imposed major restrictions on the operations of Paytm Payments Bank Ltd. It has directed Paytm Payments Bank to stop accepting deposits or top-ups in customer accounts, wallets, FASTags, and other instruments after February 29th. An RBI circular has stated that this action follows an audit report and a compliance validation report by external auditors, which revealed, quote unquote, persistent non compliances and continued material supervisory concerns in the bank, warranting further supervisory action, unquote. And media reports have also indicated that there were money laundering concerns and questionable dealings worth hundreds of crores of rupees between the Paytm wallet and the banking arm of the group. And in the latest development, which happened yesterday, the Paytm founders have written to the RBI governor and the finance minister asking them to reconsider the action taken against them. So, what exactly is Paytm accused of? What does the RBI action mean for Paytm, for the fintech sector, for ordinary users? And what does a robust regulatory framework for the digital payments ecosystem look like? We discuss all these questions and more in this episode, and we have with us Srikanth Lakshmanan of Cashless Consumer, a consumer collective that works on fintech. Srikanth, thank you so much for joining us and welcome to InFocus.
Thanks for having me here, Sampath.
So, Srikanth, I was wondering to start with if you can decode for us in layman's terms. When the RBI circular, everybody has seen it's all gobbledygook, even to me. So, in layman's terms, what action does the RBI, what is the meaning of the RBI action against Paytm and the timing of it? Can you just explain it for us?
Yes, Sampath. So, just to give prior context, the previous RBI actions have been on regular banks where people were, say, restrained from taking their deposits, like in the case of the PMC Bank or so, and many other cooperative banks which RBI puts into action. But unlike those, in this case, RBI has allowed customers to take back their money and only prevent any other top-ups or credits into the accounts held with both the Paytm wallet and the payments bank account across instruments, as you said. And the crucial difference here is that payments bank by design are not allowed to lend money. So any money that's there in the payments bank account is by design within the banking system invested in some other commercial bank, and then it is supposed to be returned as is. So that's the reason why consumers are allowed to withdraw and use the account until the balance exists. But no new top-ups are allowed across any of the accounts operated by Paytm Wallet or Payments Bank. And this, they say, is after a series of audit observations and material supervisory concerns without actually elaborating on them. And what we've heard is several media reports on claims of money laundering and so on. As for the timing, this has been like on and off with not just Paytm, but a variety of fintechs, payment aggregators, especially on onboarding new customers, and including, for that matter, I think even a large scheduled commercial bank was also restrained on its digital platforms from expanding prior to having RBI confirm that it's in line with the regulations. So this has been a case on a variety of digital offerings of not just, let's say, fintechs, but banks of all sizes, where RBI restrains the regulated entity from expanding the scope or adding the customer base citing to put in place safeguards or have the system audited before expansion. And this has already happened in the case of Paytm several times. And I think now, as a further escalation to that series of actions, they have now imposed this, one could say, sanction across their accounts.
Right. You just mentioned, Shrikant, that this has happened with Paytm several times before. So can you talk a little bit about like what was the action taken against Paytm last year? I think in October something happened, and then in 2022 March also something was happened. So they keep breaking whatever rules and regulations they're supposed to follow, and then some action is taken, and then they go on doing it. I mean, is that how it's been?
Just to kind of break that down, there are several instruments, and some of these earlier restraints were on one or the other specific instrument. Like specifically in the case that you mentioned, the March 2022 restraint was creating new payment bank accounts. And the October 2023 restraint was on offering payout services by their subsidiary Paytm Payments Services Limited. I think this is basically the entity that offers merchant payout services online or POS to various merchants. And this entity was restrained from again adding new customers. And the earlier ones, like right from 2018, have always been on KYC, and these were like lifted on and off. And in between, there were issues around wallet KYCs and RBI's approach towards wallets in general. Yeah, the earlier instances were basically on specific instruments. Say, for one could say, for example, like their FASTag until recently, I think a week earlier than the RBI action, the Indian Highway Management company that operates FASTag kind of restrained Paytm from issuing new tags. But before that, there hasn't been any action on, say, like the FASTags issued by Paytm. So the issues or the earlier regulatory actions were on specific instruments, whereas the current one is across the board, eventually to kind of say putting the entire entity at risk. It's important to note that there is very little public information as to why each of these restraints were put in place by the Reserve Bank, where we only have like let's say very high level wording like material supervisory concerns or let's say a fine amount, but without going into the details as to what really is the issue was.
Right. I mean, you are right about this high level wording without giving us too much detail, but we do seem to have some amount of detail. I mean, I just want to mention two things which everybody is talking about with regard to this action. One, of course, is that hundreds of accounts were created in this Paytm bank without proper identification. Which I find really strange, because I mean, even someone like me or most of us, I mean, when we go do regular banking with whichever normal bank, State Bank of India, whatever, there's so much pain doing KYC and this document, get that document, and here you have hundreds of accounts created without proper identification. Number one. Number two, the total value of transactions running into hundreds of crores of rupees was beyond the regulatory limits of minimum KYC prepaid instruments. I mean, I don't understand what exactly is minimum KYC prepaid instruments. Are there like degrees of KYC, minimum, medium, maximum? I had no idea that was the case. Maybe you can explain that. And secondly, how serious are these two kinds of deviations? I mean, and what do we have in place with regard to them? Yeah.
Yeah. So to answer your question, yes, there is actually a minimum, medium, and maximum KYC levels. While you mentioned about the KYC process being tedious with respect to the normal banks, there have been like digital solutions, in some sense pioneered by Paytm, but also widely adopted by other banks as well. There are probably like a dozen or odd banks which today offer digital account opening. So the first level or the minimum KYC is where you just download the app. It's an OTP verification that happens, and you give and that lets you operate with up to rupees 10,000. And then the medium level is you additionally do a eKYC based on Aadhaar or something like that, which gives you or any digital mode of KYC, where it's still you might be doing some video call or something like that additionally, and this gives you a limit up to 1 lakh per account, but only for a period of 1 year. Upon completion of 1 year, RBI insists, or this is basically coming down from the Prevention of Money Laundering Act, is that there has to be something known as in-person verification, which means that somebody else has to physically see you and then do the KYC. So, and this will eventually give the same amount of 1 lakh, but then you are allowed to continue after a year. So this is like the maximum KYC. And the traditional banks usually had only 0 or maximum KYC, but we now have like a layered digital offerings where the minimum and medium are online, where you just download the app and do it yourself, and nobody else is there to kind of verify. Or even if there is a video call, it's typically like some facial recognition / machine learning algorithms, which basically do some checks. And yeah, so to answer your question, so these are the varying KYC levels. But now the action that's being reported as red flag in the audit report is that they have been permitted transactions of several hundred crores for a minimum KYC prepaid instrument. Now, typically prepaid instrument, the values that you can load on a wallet and transact are like fixed, as in like 10,000 or 20,000 or 1 lakh. But what probably could have happened is essentially they continued with the minimum or medium KYC well beyond the 1 year without closing the account, because as per again the KYC norms, if it's more than a year, there has to be an in-person verification. And over here, again, one can say particular to Paytm has something like a KYC point, which is nothing but like a local recharge shop or a mobile phone shop where people have to go in person and verify. And there have been instances of, let's say, KYC fraud at these points as well. And there have been a bunch of shops which have been terminated as KYC points, and Paytm itself puts it on their website. And so these basically add an additional level of check with this in-person verification. And there have been issues surrounding that, and not specifically for Paytm, but for a wider institutions which offer these digital KYCs. And now the other question or the other observation of total transactions running into hundreds of crores.
Yeah, I mean, if you have this kind of minimum KYC in place, isn't there like a software thing or a systemic thing which automatically prevents somebody from doing crores of transactions on a minimum KYC? Is it like a discretionary, like somebody sitting there will allow you to do crores of transactions when the KYC is minimum?
Right. So in theory, but we don't know in practice if there was indeed somebody there doing this kind of flipping, but it's highly unlikely though. But in theory, that the software controls how much you could add. If your KYC limit is X, which is like 10,000, 20,000 or a lakh, you cannot add more than that. But what probably this one way of reading the statement could be that say several thousand or say several lakhs of users on minimum KYC or one could possibly say several 10 lakhs of users transacting even let's say 10,000 would kind of go into hundreds of crores. And that probably was like some kind of summary reportage that came out of the media reports. So that's one way of reading that number, hundreds of crores. But on this very aspect, right? Like if the total value of transaction ran into hundreds of crores, it is okay if that goes into, let's say, several lakhs of accounts split by the KYC limits. But then it's highly unlikely that they kind of go from a single account. And if they did, then that's a violation of Money Laundering Act again, and ED has to come into the picture. And I think yesterday or a day before, Paytm confirmed that there has been no action from the ED on them yet. But it's important to note that there were ED raids that have happened in Paytm in 2022 and sometime probably in 2019 as well, related to the gambling apps and Chinese loan apps, and how proceeds of those crimes, or the loan apps and gambling apps, were routed via Paytm to other offshore entities or persons.
No, Shrikant, just one simple question. Like if there is a transaction limit on a minimum KYC account, which is say 10,000 or 1 lakh, how could that be exceeded at all?
Right. It cannot be. It cannot be is the simple state answer. But what we need to kind of see is where these minimum KYC accounts opened with at least the minimum details that they require, which is basically the mobile number and an ID card of any type. And there have been, and we've seen other cases of other entities doing KYC irregularities where like somebody else's PAN card or Aadhaar card gets shared, and there are accounts or say loan accounts opened in one case of a different entity. So these are generic KYC problems, and that get compounded if you have only a digital offering. Like say in the case of Paytm Bank, which does not really have a branch capability as like by design, and they only have these KYC points, which are basically agents manning them. And so the quality of KYC can vary based on these factors, and we don't know like what the audit report kind of found in the quality of the KYC of say possibly several hundred or thousands of accounts, and the number could just be like the cumulative transactional value spread across these accounts, which the audit found was probably lacking proper KYC.
Right, and one of the things which has come out is that there are more than 1,000 wallets, Paytm wallets linked to one PAN number. I mean, isn't there a mechanism, or isn't it like obvious that action can be and should be taken against whoever is the holder of that one PAN number? It's very clear that this person has done something that is not correct.
Right. But this kind of gets into the larger problem of PAN number and PAN number based identification / KYC itself. As I mentioned, there have been other cases of misuse of PAN by fraudsters, and victims of identity theft are actually being siphoned off their PAN and being used by many others without even the holder of the PAN knowing them. But unlikely that this could have happened, especially without, let's say, reportage, because by design, Paytm is also a regulated entity under the PMLA, and it's supposed to have notified, firstly, prevented, but even if it didn't prevent, it should have notified the enforcement directorate as per the systems put in place for the Prevention of Money Laundering Act. And there has to be some kind of an ED investigation on this. But from what we've heard is that the ED has not acted on Paytm yet. But this could possibly be changing.
Right, the ED has not acted yet. That's very interesting. Now, Paytm's founders, Srikant, they have written to the RBI and the FM asking them to reassess, quote unquote, the proportionality of restrictions that have been imposed on Paytm. and they have cited concerns such as potential impact on the payments bank, potential impact on the fintech ecosystem, and the impact on the broader economy, etc. So, how valid is this suggestion that the RBI action is quote unquote excessive? Is it excessive?
It kind of depends on the prism. I would say that the RBI has restrained from acting on several of these issues, and as I mentioned, it kind of kept a kind of a silence and delay the problem by imposing just sanctions on, say, new account signups. And this has not just happened for Paytm, but like I mentioned in the start, it has happened across several banks of all sizes, where the RBI's restraint was only on adding new customers. And this has happened across payment aggregators, wallets, digital offerings of large banks, where RBI says that pending so and so audit or slash pending further orders, the entity is asked to not add any users to the digital offering. Now, what it does is it doesn't actually put a restraint on the current operations. So in some cases, the entities are kind of the status quo continues, where the entity continues to operate, serves the existing customers, which in itself is a very large customer base. So the entity does not feel uh, incentivized to act on any observations or put in checks and balances. And without these checks and balances, the like in the case of, say, KYC or addressing frauds, and these are some of the problems that are risks that are involved in these digital uh, uh, fintechs or the digital offerings of banks themselves. But RBI's refusal to kind of do an active regulation in the space, and by and large, RBI has been a proponent of self-regulation by the entities themselves, or self-regulation by an industry body, and has not regulated for the problems. And at some point, the problems become so large that the only action that RBI can afford to take is to kind of put a complete stoppage, like it has done in the case of Paytm. So one would kind of, if one sees this uh, from a consumer sense, like this could be like the excessive action is largely due to the delay caused by the inaction in the previous years. But if one could see it from like a fintech or an industry perspective, they could see that these measures are harsh and there could be like a layered sense of actioning. But and there are merits to both these arguments. But I think RBI should come forward with a more transparent and structured problems around these digital offerings, be it KYC or a fraud or money laundering, and kind of address them instead of like putting restraints or putting mild restraints such as preventing from adding new customers, and then like one fine day come with a big bang and do this action.
Right. I mean, that's really well explained, Shrikant. Thank you so much. I appreciate that. I think you've established pretty clearly that this action, whether it is excessive or not, is actually a consequence of RBI's refusal to actively regulate this space and relying more on self-regulation. And then one fine day, it's been forced to act in this way. But nonetheless, I mean, you were speaking of whether they have incentives, entities like Paytm to put in place checks and balances. Now, despite this action from the RBI saying you can't have new accounts being opened, etc., Paytm can still continue with its other operations. It can continue with loan distribution. It can continue with insurance distribution. It can continue its equity broking business. And it can also continue with its offline merchant payment network offerings like Paytm QR, Paytm Soundbox, Paytm card machine, where it can onboard new offline merchants as well. So it can continue with a lot of its other businesses worth hundreds of crores of rupees. So, I mean, Well, we had certain concerns which we discussed about, Paytm Bank not following certain RBI norms, for deposits, etc., and which is what got this action in the first place. Now, these very same concerns about KYC, thousands of crores going through minimum KYC accounts, all those kinds of, due diligence not being carried out. Are those concerns not applicable to these other operations which Paytm is now allowed to do?
So, like one could split this into two parts, right? So, one is on the other businesses that Paytm operates, let's just say equity broking or insurance distribution. These are regulated by, say, the IRDA and SEBI, and they are unconnected with the payments bank per se. And while there could be some degree of commonality between these, but the KYC norms, let's say, vary from for having a payments bank wallet or a payments bank account to, let's say, having a brokerage account, and so on. So there could be differences in them, or it's up to those regulators to kind of see. Now that Paytm has had issues flagged by one regulator, are there like issues there? And it's up to those regulators to kind of see where, like, if there are any issues with Paytm on their sector. But on the other side, on the payment products itself, on say QR or Soundbox or a POS machine, I think what Paytm is trying to convey to its users is that they would switch to a different nodal bank, and they would basically be a distributor for any other bank which is offering. And in which case, though the processes might remain same, but because of the newer bank which would kind of partner with Paytm knows about these issues, the expectation is that whichever bank from now on partners with Paytm would kind of put in additional processes / checks in place to kind of prevent these concerns that RBI has. And it's very likely that no other bank at this point of time would kind of tie up with Paytm without having these additional checks and balances. So that's the hope. And in this process, Paytm basically loses the exclusivity of its customer base, because now, I mean, till this RBI action, the Paytm users of, let's say, these payment products of QR, Soundbox, and so on, were kind of the exclusive consumers of Paytm. And whereas post this action, and if we go by what Paytm says, that they would partner with some other bank, then those consumers would essentially become consumers of that partner bank and not Paytm exclusively. So Paytm's value proposition would kind of be altered by this, and say whichever bank is partnering them would kind of have the business value from them, and they are also expected to put in, let's say, these additional checks to kind of satisfy RBI. Otherwise, the RBI could then again come back and say that it's still not workable. So, and no bank, let's say no other larger bank would risk itself into getting into that situation.
Right. I mean, you're saying that IRDA and SEBI are the regulatory authorities for these other operations of Paytm, so it's their call. I mean, one does hope that these regulations and enforcements don't fall between two stools, between two different or three different regulatory authorities, thinking this entity will regulate this, and I'm going to regulate only this. Anyway, coming to one final question, Srikant, before I let you go. We've discussed the entire Paytm saga in some detail in this podcast. So, just on a final note, I was just wondering, where does India stand really, in terms of a robust regulatory framework for the fintech sector? Because you spoke about self-regulation. I mean, can you give me an example of any industry where self-regulation is like exemplary? Where has it ever worked? I mean, we keep coming back to self-regulation. I mean, as a consumer, I would also like to self-regulate. Don't ask me for KYC 20 times a year. So where does this self-regulatory framework come into the picture, and what are the, say, three or four things you would like to see in place as a regulatory mechanism for the digital payments fintech sector?
Yeah, so like broader question on self-regulation, I would say that the the preference for, let's say, the regulator to kind of let the industry self-regulate is basically doing a trade-off between um, growth slash investments into that sector by industry, and kind of hedging that against issues of consumer protection and so on. And the regulator seems to kind of be in the side of having growth, or having a preference to growth. But there are some cases where self-regulation, currently even within RBI, say the microfinance sector is self-regulated. We've seen harms prior to the self-regulation and even after the self-regulation.
No, what is prior to self-regulation? Prior to self-regulation is self-regulation, right?
No, prior to self-regulation is a case which is like no regulation. So, which is where, like, if you, so where when the sector is very new, right? Like we've seen this in microfinance as well. Like when like early 2000s, when microfinance was new in India, the sector was largely unregulated, and we saw that lead to a series of farmer suicides in 2009 due to a microfinance crisis in Andhra Pradesh, and that led to RBI forming this preference to a self-regulation. And technically, for the last decade, microfinance in India is self-regulated by the industry, but that hasn't stopped the industry from having episodes of having issues of consumer protection or other, let's say, issues around the sector. So that's the preference on self-regulation, and it's up to, let's say, Parliament to kind of question the regulator as to what's the role of a regulator if industries do self-regulation. So, I mean, in one sense, the Parliament should hold the RBI in account as to what's the role of RBI if industry is going to self-regulate. And so these kind of questions need to come up and kind of draw a line as to what should be the bound. In fact, there is an ongoing consultation paper by the RBI on the broader realms of self-regulatory framework across, and there was one that concluded self-regulatory paper on self-regulation for the fintech sector, and now there is a broader paper on self-regulation in the banking space itself, and these are consultation papers by RBI, but ideally there should also be some kind of a parliamentary discussions around these, and the bounds of self-regulation slash regulation needs to be identified. Otherwise, like, we run into this risk of having a growth period having its own issues which don't kind of come up, and one day suddenly it kind of becomes too hot, and you basically are forced to take stronger actions, which is going to put hardship on the industry, hardship on consumers, and it's not a favorable environment for growth either, because you kind of postpone the issues of regulations and until a point where it becomes like too critical, where it's too late for anything to be done, and the only thing that can be done is to shut off things. So I think there has to be some kind of balance on the regulatory approach, and there has to be more transparency from the regulator on.
So right now, the only regulation which happens is whenever RBI decides to do an audit. That is the only regulatory action. I mean, only regulatory mechanism. It's like, what other regulatory mechanism does this self-regulation enforce?
I mean, specifically to payment slash fintech, RBI has a bunch of compliance norms where the industry participants slash regulated entities are supposed to furnish data to RBI. But then this does not. This kind of goes into like some kind of a one-way filing where people file things, and if RBI chooses to look into these and then drill down into these and find some strange things, then it orders into an audit. And then if that audit reports find something then we land up in a situation like this. And these are like pretty, let's say, manual process. It doesn't happen for every entity. Now, for example, RBI regulates close to 1,300 banks. And if one were to ask if KYC is the issue for only Paytm Bank or the larger ecosystem, the issue is, of course, it's an issue for larger ecosystem, and every bank would have few issues around KYC. But are these getting like reported and followed up? Is something that we don't know, because the regulator does not kind of put out data on this as to how many entities were audited, how many reports were filed, how many entities were chosen for auditing, how many audit reports got submitted, and then how many entities had actions taken on them. So we don't even have this data. We just have, let's say, a series of press releases in a year saying RBI has taken action X on entity Y for material supervisory concerns. There has to be better transparency than this.
Right. I mean, better transparency, and also I think a more, a deeper regulatory capacity, whether you call it self-regulation or a more traditional form of regulation. I think the capacity needs to be more, and there needs to be further debate on the self-regulatory mechanisms for the fintech sector as a whole. Thank you so much, Srikanth, for joining us and for sharing your insights and observations on this topic. Pleasure talking.
Thank you, Santosh.
In Focus will be back soon with analysis of the biggest news issues. In the meantime, you can find our podcast on Spotify, Apple Podcasts, Stitcher, and other platforms. Just search for In Focus by The Hindu. We'll see you soon.